So, Anthony, there's a couple of offsets here. A, it doesn't seem that much structure or infrastructure has been hit. And B, OPEC has decided to at least increase production a little bit. How much is that calming the oil market today?
Yeah, I think, good morning, Vonnie. I think that OPEC move to add more oil than was expected to the market was really a plan to try to calm nerves in the market. We've seen in the run up to this to the start of this conflict that oil has really priced in a lot of the geopolitical risk and a lot of the gains, but we still see that jump higher by the start of the actual conflict and by that effective closure of the Strait of Hormuz. The Iranians have come out saying that they don't plan to close it, but effectively ships are avoiding it. We're seeing ships blocked up in the Persian Gulf there and others outside the Strait of Hormuz not coming in. So that's going to slowly choke off some of the oil flow there. So that's why we're seeing some of this reaction in the market. We saw it jump over $80 a barrel and then come back down a little bit as traders do assess what the real physical damage is yet. So far, we're not seeing that. We're not seeing physical damage or any tankers, major tankers hit. There were a few hit yesterday outside the Strait of Hormuz, but we're not seeing them really targeted going through yet. So we will have to watch that and see if there is any physical damage and if that then does impact the price moving that higher up. But so far, traders are taking some of that political risk that they've already put in there, waiting to see what the real impact is. Those OPEC supplies, the question is whether they can get out of the Persian Gulf and whether they can get to market. So that's the real issue that traders are watching, Vonnie.
And of course, LNG as well, Anthony. I mean, huge amounts of LNG are shipped. And obviously, last time, there was a war, i.e. the Ukraine war, we saw the Netherlands contract just absolutely spike. And then it had a knock-on effect to Henry Hub as well. What are we anticipating here?
Yeah, so LNG is one of those products that is going to be really affected by this war because Qatar is such a huge exporter of LNG. They've long been the biggest exporter, now one of the top three alongside the U.S. and Australia. But Qatar is fully dependent on shipping through the Persian Gulf via the Strait of Hormuz to get to global markets. Now, not that much of that Qatari supply is flowing to Europe. Europe is buying a lot from the United States now. As you mentioned, with the start of the Ukraine war, prices shot up there because of issues around Russian supply. And now the Europeans are taking a lot of U.S. LNG. But that may impact the Asian markets. If those Asian buyers are not able to get cargoes coming out of the Gulf, then they will turn to try to buy some of those U.S. cargoes, and that will increase the price. We're seeing TTF a little bit flat still this morning, but that's because a lot of LNG contracts are still, in some cases, indexed to oil. And again, there's that limited impact going into Europe, with most of those cargoes going to Asia. In addition to LNG, a lot of traders are telling us that refined oil products, diesel, jet fuel, these kind of things that the Gulf countries are big producers of, and they ship a lot of those to Europe, that will also be impacted. Whereas with crude oil, if there is a real closure of the Strait of Hormuz, there are alternative routes to get oil out. The UAE has a pipeline that surpasses Hormuz, goes to an emirate called Fujairah, which is out opening to the Indian Ocean. And the Saudis have a pipeline across the country to the Red Sea on the West Coast. So there are other ways for some oil to get out, but it's really LNG and oil products that will be largely stuck in there. And of course, if there is that effective, big, definitive closure of Strait of Hormuz or any impacted infrastructure, then we could see prices going much higher, Vonnie.